The time now, 8:45. We're looking live at the Dow on Wall Street, which is shedding some of its gains. It had recovered just a little bit, now up a blip on the radar screen after losing 400 points yesterday, the worst day since March, and just about wiping out the Dow's gains for the year. What happened? Investors have another option, namely Treasury yields. And we're joined by Ashley Terrell with Burns Financial to explain what is going on here. Good morning to you.
Good morning.
So let's start with the basics. A Treasury yield, what is that?
Yeah, so that is the rate that investors can expect to get by holding one of the U.S. government securities, and it's what the government obviously pays for cash. So right now we have an inverted yield curve. So what that means is 2-year yields are paying more than the 10-year yields. So we're going to see that gap get a little bit smaller, and eventually we're going to get the 10-year yields paying higher than the 2-year yields.
Gotcha.
So that's where we're on track to go. In order to get there, there's a couple of things that are going to happen. Either the 10-year yield is going to continue to increase, or the 2-year yields are going to decrease. So we're kind of waiting to see what's going to happen there.
And not to get too far into the weeds here, but the 10-year yield is at a 16-year high right now. So it's a real, for a while, people would buy bonds for the safety of bonds, but stocks were where it was all at.
Yes. Right now, those bonds are definitely giving stocks a run for their money. We're going to see probably some fluctuation in the market because those high yields are competing with equities. So we can expect to see a little bit of fluctuation there. Hopefully, it's short term and not long term.
In a way, is part of it kind of a supply and demand issue, in a way where somebody looks at this, whether it's someone who does it professionally as you do, or just the average Joe, and says, well, overall you don't have the same appetite for stocks, and therefore stocks are deflated in price. Well,
one of the things that you said was supply, and I like that word. Right now, the Treasury needs cash. So supply is one of the things that are attributing to these yields right now. The Treasury needs cash, so they're selling those treasuries and they're trying to get cash. So there's a high supply. So
this is interest rates. What's going on? What's driving the yield so high?
So the budget was really close. The Feds, as you know, in June, they just raised that deficit. So as we're getting closer to that deficit, the money supply was running low. So we're using up all those cash reserves. So that's, I think, one of the main factors.
The bottom line is, though, that at the end of the day, people who might be looking at their stocks and crying, in their soup, have options. There are other ways to make money.
Yes, absolutely. There's opportunity out there, and it just depends on the time horizon that you have. If you're looking for short term or shorter term, then definitely those bonds and those U.S. securities are the way to go. If you have time on your side, then right now is a good time to get some stocks on sale.
Well, I'll tell you one thing. If we were ever going to do a story about Treasury yields, today was the day to do it. Ashley Terrell from Burns Financial, thanks very much.